Okay, and welcome back, students who are taking financial accounting and working through the Chapter 2 exercises for Group B. So let's just pick up with 2-27, and this one is going to be a little bit more time consuming, okay? All right, but if you've worked through 24, 25, well, let's see, 25, 26, 20, 24, 25, and 26, making these journal entries shouldn't be so bad, okay? Um, Going Green had the following transactions. The following T accounts have been set up with their beginning balances. Now remember, in the book here, they're showing them as T accounts, okay? But really, T accounts are just another form of a general ledger account. So you're going to prepare journal entries over here, and you post them to your general ledger accounts. Well, we're going to kind of like post them into our T accounts here, which represent our general ledger accounts. So it says 1, journalize the transactions for December, then 2, post the journal entries to the appropriate T accounts and identify all items by date. Then 3, will calculate the balances, and then 4, will prove that the total of the debits equals the total of all the credits by preparing a trial balance at December 31st, 2014. So basically, what you're doing here, and this is what you're doing here is kind of like the 2/3 of what you were going to do when you have to do the graded project after you complete the next chapter. All right, when you're doing the graded project for all 3 chapters, this makes up about 2/3 of the work that you'll have to do for the graded project. In the graded project, you're going to be given beginning balances, okay, that's on a trial balance, and you're going to have to set up your general ledger accounts. In other words, you're going to have to put your balances in those accounts. The balances that you have on your trial balance, you're going to have to create the general ledger account and show the beginning balances, which is what you have here. Then through the month, you're going to have transactions that you're going to have to journalize, and then you're going to post into those accounts. And after you've posted them, you're going to figure out what the balance is in each account. And once you have the balances, then you're going to create a trial balance. So at the beginning of the accounting period, you start out with beginning balances. Throughout the accounting period, you journalize your transactions. And at the end of the accounting period, you post them, you create the balances, and then you create a trial balance at the end of the accounting period. And like I said, that makes up about 2/3 of your graded project. So kind of pay attention to what's going on in this for this particular exercise, because it will help you, even though you're not going to do this graded project for another chapter, you're starting to get accustomed to doing what you need to do for this project. Okay, so it's already giving you the starting balances in your ledger accounts, and it says journalize the transaction. So making the journal entries. December 2nd, I'm paying rent expense. So my cash, I'm paying out $1,600. So that's going to be a credit to cash for $1,600. And that means I'm going to debit. What am I debiting? Rent expense for $1,600. Okay. Now, let me see here. How am I? Okay. I'm trying to think about this. How am I going to go about this? All right, I'm going to go on to another slide here, and I'm going to actually put the journal entries here on this here slide. Okay, so December 2nd. So I have a debit to rent expense for $1,600 and a credit to cash for $1,600. All right. And the reason why I'm going to do this is because, obviously I have to post to the ledger accounts, all right? And I don't have enough space to be able to post to those ledger accounts, all right? So I'm going to perform services for a customer and received cash. So for 12/4, I'm receiving cash, so my cash increases, so I debit cash for 900, and that means I credit, and it's services performed for a customer, so that's service revenue for 900. Notice that if I'm not sure, what account, I know I'm making a sale, so it's a revenue account, and I have to look to see what the account name is for my revenue account, so it's service revenue. All right. So on 12/4, I'm debiting cash, crediting service revenue for 900. All right. Let's see, on 12/8, I'm purchasing supplies on account for 225. Okay. So am I affecting cash? No. Why? Because I'm purchasing supplies on account. I'm buying it on credit. So I'm not affecting cash. I am affecting my accounts payable. So my accounts payable balance is here. I'm increasing how much I owe by 225, so that's an increase in my accounts payable. So I credit accounts payable for 225, and I debit, what am I buying? I'm buying supplies for 225. So on 12/8, debit supplies for 225, and credit accounts payable for 225. Yes, I know I needed to indent that, just like I should indent cash there. Accounts payable. All right, let's see. Next is 12/11. So 12/11. Receive cash from credit customers on account. Right? So am I affecting cash? Yes. I'm receiving cash, so my cash increases, so I debit cash for 1,500. I credit something else. Well, what am I receiving it for? From credit customers on account. Customers are accounts receivable on account, right? So accounts receivable for 1,500. That's why you do cash first. Don't start out with the accounts receivable first. Start out with the cash. Ask yourself, let's see, 1,500, right? Ask yourself, am I affecting cash first? Then deal with the receivables and payables after you figured out the cash, because you automatically fall into the correct entry for the receivable. Okay. Let's see here. 12/15. Okay, sold an additional 5,000 of common stock. So that means if I'm selling, common stock, I'm receiving cash. My cash increases, so I debit cash for 5,000, and I'm crediting common stock for 5,000. Now I'll write this on the next slide when I do this next entry, so I'm going to save some time there. Okay, 12/19, I'm paying $375 on account. So yeah, I see on account, and I know that's a receivable or payable. Okay, but don't think of it that way. Ask myself, am I affecting cash? Yes. Right? Why? I'm paying cash, so my cash is decreasing by $375. So I have a credit to cash. Oops, indent that. For $375, and that means I debit something else, which is, it's on account, right? Well, if I'm paying, that means I owe somebody, so that would be an accounts payable, right? So those two journal entries, 1215 and 1219, I'm going to write on this slide here, right? 1215 was a debit to cash, credit to common stock. Debit cash, credit common stock for 5,000. And 1219 was a debit to accounts payable and a credit to cash. Credit to cash for 375. All right. And 27 and 28. Okay, 1227. Perform service for customers on account for 1640. Right. So, am I affecting cash? No. Why? Because I'm extending credit to my customers on account. Right? I'm not affecting cash. Right? So the next question is, am I affecting receivables or payables? Well, yes, I'm affecting receivables because I'm giving credit to a customer. So is my receivable going up or down? Well, if I'm extending the credit for 1640, that means my accounts receivable is going up. So I treat receivables like I do cash. And if it increases, I know that I debit accounts receivables for 1640. And then I credit, something for 1640. Well, what am I doing? I'm performing service. That's the normal operation of my business, which is sale. So I credit service revenue. That's all there is to that entry. And then 28 here, made a payment on the notes payable for 2,500. So if I'm making a payment, am I affecting cash? Yes. My cash is decreasing by 2,500 because I'm making a payment. So that means I'm crediting cash, indent, for 2,500, and I'm debiting notes payable for the 2,500. Okay, so I'm going to transfer these entries. All right. So 1227. I'm going to go down one more slide here. 1227. I had an accounts debit to accounts receivable for 1640. Oops, I don't want to put it way over there. 1640, and a credit to service revenue. Get my formatting right here. A debit to accounts receivable and a credit to service revenue for 1640. And then for the last entry, 1228, that was a notes payable and a cash. Okay. So I have a debit to notes payable and a credit to cash for 2,500. Okay, now those are my journal entries. So I did part number one in this requirement, okay, where I journalized the transactions. All right, so there's my journalized transactions for the month. Now it says 2, post the journal entries to the appropriate T accounts, right? Now the reason why I did this was, oops, wrong way. I did it this way and I left space down the side is because I'm going to recreate the T accounts now, all right? So I'm going to have a T account for cash, and the beginning balance in that account was $43.25, and I have a T account for accounts. Let's see here. What's my next account? accounts receivable, and that beginning balance was $2,200. Then I have a supplies account, and that balance was $450. And then I had a furniture account, office furniture, and that balance was $3,100. And then I had a building account, and that balance was $42,000. And then I had a accounts payable account, and that was a credit for, a credit for $875. Then I had a notes payable with a credit of $17,500, sorry. Then I had common stock for $30,000 on the credit side. Then I had service revenue for $5,300. And then I had a rent expense, which was a debit of $1,600. Okay, so all I did right here was I took this information here, okay, and reproduced it here, with the exception being that I didn't write in the dates as the beginning balances. Now, I should put in the dates here, 12/1, okay, 12/1, but as you can see, I'm limited in my space, so I'm not going to write in the dates. When you're doing it, yes, you should put in the dates, okay? If I was actually using a ledger sheet, when I post from the journals into the ledger accounts, I would put the date, and that's important because that helps you find the information, okay? It's sort of akin to a posting reference, which we'll talk about in the future, okay? But for right now, I've created my T accounts. I've just recreated this, and now what I need to do is I need to go and post this information, post these journal entries into the ledger accounts. And remember, when we're posting, all we're doing is just rearranging the information, okay? We're grouping it into like things. So my first entry here on December 2nd is to rent expense, all right? So for $1,600. So I come down here to rent expense, and it's a debit to rent expense for $1,600. Now, I would normally put in the date here, 12/2, but I'm not going to because of space, okay? So I put my debit here, and that means now I have to make my post to cash. Well, my post to cash here is $1,600 on the credit side, and I would normally put in the date so that I can identify it, okay? Now for my next entry, right, I'm going to debit cash for $900. So I would put the date 12/4 here, okay? And then I come down here to my service revenue account and put $900 on the credit side. So here's my service revenue account. I'm putting $900 on the credit side, and I would normally put the date in there, okay? I just don't have the space, so I'm not. Right, so now I have a debit to supplies for $225. So on the debit side, I put my $225, and I would normally put the date. And I have a credit to accounts payable for $225. So find my accounts payable, and on the credit side, put $225. Notice I'm putting a check mark showing that I posted those amounts, so I don't get I don't get confused, and I know exactly where to pick up, even though I'm flipping back and forth between screens. If you're keeping books by hand, you are going to be flipping back and forth between pages, and you need to know, you have to have some kind of visual representation to know exactly what you posted. Now you could say, yeah, I'm doing the books and I know what I posted. What happens if right now there's a fire drill and you have to stop? And you go outside, and it's late in the day and the boss says go home, see you tomorrow, right? But tonight you get sick, so you don't show up for work tomorrow. Well, he needs to be able to look at those books to be able to see what work you did and what you didn't do. So when you're posting by, it's called a posting reference column. You'll see that in your journals and you'll see it in your ledger accounts, and you would make an indication in your posting reference column showing that you actually, did that work. So if he looks at your books, okay, he can see that you've only gotten this far and that you haven't entered any of these other entries here. Okay, they still need to be entered. And so if he wanted to know what his balance in cash was, he could come up here and say, okay, for my cash right now, okay, I have a debit of $43.25, a debit of $900, and a credit of $1,600, but I have to add, these other cash items to that account in order to get the balance. So that's why you make a posting reference, okay? And in this case here, I'm just using a check mark just to show that I actually made that posting. So as I continue on down, I have a debit to cash for $1,500, and of course I'd put the date in, and I have a credit to accounts receivable for $1,500. I have a debit to cash for $5,000, so I write $5,000 there. And I have a credit to common stock for $5,000, so next screen here. So that's $5,000 for common stock. Accounts payable for $375, so a debit to accounts payable for $375. Debits are on the left, credits are on the right on your T accounts. Credit to cash for $375. And again, I'd be putting in the dates, like in this case here, I put 12/19, right? That's $375. Right? Next entry, a debit to accounts receivable for $1,640. So accounts receivable, a debit of $1,640. And a credit to service revenue for $1,640. So under service revenue, write my $1,640. Notes payable, debit to notes payable for $2,500. And a credit to cash for $2,500. So get my credit to cash for $2,500. Okay, so now I've gone and I've posted all of my journal entries to the appropriate T account or to the appropriate general ledger account. So I just finished number 2. So number 3 says calculate the balance for each account at December 31st. All right. So another way. So now I need to go down and figure out what my balance is. So I draw a line and then I start doing the math. Okay. 43.25 plus 900 plus 1,500 plus 5,000 is equal to 11,725 as a debit. And then I have 1,600 plus 375 plus 2,500 is 4,475. 4,400. Write better here, Jim. 4,475, and that was 43.25 plus 9 plus 15 plus 5,000. So that was 11,725 for my debits. So I subtract the 4,475 from the 11,725, and that gives me a balance of $7,250. Okay. And since my debits are greater than my credits, I put the $7,250 on the debit side. Okay, so that's how I create the balance in a ledger account. Right? And all I'm going to do is I'm going to go down through each and every ledger account and get that particular balance. So for accounts receivable here, I have 2,200 plus 1,640 is 3,840 less 1,500 is 0,432. So my debits are greater than my credits, so it's 2,340 on the debit side. Okay. Now notice that, you know, an asset account, the normal balance is a debit. So most often the balances in the asset accounts are going to be on the debit side. So in this case here, I have 675 since I have no credits. For office furniture, it's 3,100 since I have no credits. For building, it's 42,000 since I have no credits. For accounts payable, okay, on the credit side, because remember, accounts payable is a liability and the normal balance for a liability account is a credit, so my credit side should be greater. So 875 plus 225 is 00, that's 1100 less 375, which gives me 725. Okay, so this should be 725 as a balance on the credit side because my credits are greater than my debits. Okay. For our notes payable, it's 20,000. For, oops, well, I made a mistake somewhere. It's back up here. Yep, there's my mistake. And anybody who was watching this video was probably screaming, "Hey, stupid dummy, you made a mistake, go." All right, well, this is when you make mistakes, you know, I would have, when I'm creating my trial balance, my debits would not have equaled my credits because why? This here note payable was for a debit of 2,500 and not a credit, so my 2,500 belonged on this side. Okay, and if I didn't catch that, when I create my trial balance, my debits would have not equaled my credits, and that means I'd have to go back and find that mistake. And when I found it, then I'd correct it so that it would, I would balance. Okay, all right. So 17.5 minus 2,500 is 15,000 on the credit side. Common stock is 35,000. My service revenue is 918 7840, and my rent is 3,200. Okay, so those are the balances in the accounts. Right. So, and I'm at 27 minutes right now. So I just did number 3. I calculated the balance of each account at December 31st, but because I'm at 28 minutes, I'm going to stop the video right here, and in the next video I'm going to create my trial balance in order to make sure my debits equal my credits. All right, so this will continue on in the next part.